Hello everybody. So this is my only video of the day because I'm already tired. This video is for the super fans of the channel. This video is not for the normies, not for the normal thinkers, not for those who love return-free risk and government bonds. Video entitled, Mr. Market doubles down on nonsense. Mr. Market is doubling down on the nonsense. We've had NVIDIA earnings. They were absolutely stellar. What does Mr. Market want more? It's been having stocks left and right. So many stocks getting halved. Like EOS the other day, right? It's all over the place. It's entirely ridiculous. And no, Mr. Market. No. I will not be buying TJ Maxx. Right? The market is dumping NVIDIA and buying TJ Maxx. Right? The market is dumping Amazon, who, by the way, is powering this AI revolution that the market doesn't want to believe in with AWS. The market is dumping Amazon, okay? And what's it doing? It's buying Walmart. It's buying Costco. It's buying Dollar General. The market is dumping Tesla. The future of work, autonomy, the future of auto is dumping Tesla, and it's buying AutoZone and O'Reilly, right? Used car parts. This market makes absolutely no sense. This anti-AI trade is entirely ridiculous, as if AI was not real. This is entirely ridiculous. They tried poking holes. Listen to the entire NVIDIA conference call. They kept poking hole into whatever Jensen was saying, trying to get a soundbite as to whether there could be an issue with AI. There is no issue with AI. Just this morning, through the roof funding for OpenAI by 3 hyperscalers. Just this morning, Dell way up on crazy demand. Mara, too, pivoting into AI. Nebius is down. The market is entirely crazy. It's never looked this close to a casino right now. The market has been broken since November. I don't know what's going on. But anyways, let's go as to why the market is complete nonsense today. Because the market seems to believe flawed data using flawed methodology. Why do we use surveys? In the era of AI where we can track prices in real time, why do we use surveys? We get flawed numbers. Like, why do we use the BLS? Why do we use humans to measure? This is entirely ridiculous. Companies are moving away from using humans to do anything. Humans do tons of mistakes, have tons of biases. Anyways, a flawed measure from a flawed government entity released a flawed number saying, and by the way, that number is barely anything. Headline PPI rose 0.5 above the forecast of 0.3. So this is a rounding error as far as I'm concerned. It's actually a change of 0.1 from the prior month. And that is a reason to dump super innovative companies. That is a reason to dump growth. And that is a reason to buy bonds, because the market is dumping NVIDIA. It's dumping the greatest company of this decade, perhaps the greatest company of this century, along with Tesla. The jury's still out. I guess you could put Amazon in there. But one of the greatest companies, definitely the greatest company of this decade, is NVIDIA. It's dumping it to buy bonds, to buy 10-year yield falls below 4% on hot producer prices reading. Hot producer prices reading. Are you kidding me? We moved from 0.3 to 0.5. We actually moved from 0.4 to 0.5. 0.3 was expected. So we increased 1/10 of a percentage point. It's a rounding error. It is the thickness of the line on the chart. And the market is so dumb that is just go ahead. We are selling Nvidia, we are selling tech, and we're buying consumer defensives. We're buying Philip Morris, we're buying Coca-Cola, we're buying Walmart, and we're also buying bonds. So this short-term nonsense baffles me. Just because Wall Street was taught in the 70s that government bonds are risk-free doesn't mean that it's still true today. Doesn't mean that you shouldn't do a little bit of analysis about government bonds. Doesn't mean that you should have a little awareness about how much debt there is in the system. Doesn't mean that you shouldn't look even at your own agencies, rating agencies, which downgraded US debt. On multiple occasions, the rating agencies downgraded it. Why did they downgrade it? Because we operate at a rate of 2 to 3 government shutdowns a year. Do you think there's going to be another shutdown before the midterms in 2026? We've already had one shutdown in 2026. I believe we're at least going to have another shutdown at some point. Yet they're buying government bonds. Yeah, it's risk-free rate. It's what people believe. You were taught this in the 70s. It's risk-free rate. This is absolutely nonsense. I would sleep so much better at night having my money in Nvidia than having it in a 10-year government bond. Right? What if a government shutdown lasts 300 days? What happens to the coupons? That has happened in Belgium. That has happened in many decent democracies. That has happened, that you could have a shutdown that lasts a very long time. The market is... It's nonsense. You even have, like I said, one of the biggest leaders of our era, Elon Musk, joking on the conference call, haha, we'll see how risk-free it really is. We'll see how risk-free it really is. Laughing. You have CFOs laughing. And this is what Wall Street does. This is complete nonsense. This is complete nonsense. I told you this video is for the super fans of the channel. It's not for normies. Anyways, let's go. AI is real, folks. AI is not fake. AI is real. Deflation is about to be the real issue. Job losses, short to medium term. I believe over long-term jobs will be fine. You already see OpenAI, OpenClaw, hiring humans, rent a human. You may have seen rent a human. You may have seen all these things. I believe entrepreneurship over the long run. I think we're in for a wonderful world over the long run. But over the short run, job losses are gonna be real. Over the short run, because AI is happening right now, and companies are laying off right now. So read this headline. Block shares soar as much as 24% as the company slashes workforce by nearly half. They are laying off nearly half their employees. The stock rises 24%. How many companies are going to do that? Yeah, the BLS is certainly not going to do that. The Fed is not going to do that. The Wall Street bloated banks who are fighting to not give a yield on checking accounts, they are not going to do that. Because they don't conceive that you could run a huge bank with only a few hundred people as opposed to a few 100,000 people. Some of these banks are hundreds of thousands of people when they should be hundreds of people. There should be 99% less workforce. And this will happen eventually as we have AI coming in. But they fight. They don't want to pay a yield on the checking account. Anyways, I digress. This is going to happen in so many places, right? Look at PayPal. What would be an amazing thesis for PayPal, for example? Well, what if PayPal slashed half its workforce? Well, if PayPal did that, that'd be a very interesting stock, wouldn't it? There's a lot of stocks that don't grow very much, which would become very interesting stocks if they started, cutting half the workforce and still functioning, right? Does Wall Street even follow AI? As Wall Street followed Claude then renamed Maltbot, then renamed OpenClaw? As Wall Street followed that at all? Right? I didn't really hear any questions about that on the NVIDIA call. About agency, AI becoming agentic, agency within the AI. This is a huge, huge deal. What is Wall Street doing? No, they're attending seminars about AI fatigue. We're AI fatigued. It's moving too fast. This is, people are having an anti-AI trade. An anti-AI trade. AI is not slowing down. AI is absolutely accelerating. The acceleration is second to none. Read the post of Karpathy, right? About how coding now has changed for really, really the better. Anyways, the Fed has a dual mandate, folks. And at some point, they will have to start to care about unemployment. Because, yeah, sure, they're going to try to massage the numbers really, really well until the midterms. But at some point, you're going to correct these unemployment numbers. And the Fed, of course, will probably be too late, as always. But this is absolutely nonsense. Like, no, Wall Street, I don't want to buy AutoZone. I don't want to buy TJ Maxx. I certainly don't want to buy Dollar General. This is ridiculous. Value stocks are becoming anything but. Value stocks are not in a value territory right now. It's anything but. People still using market cap to value these companies, not knowing about enterprise value, not knowing that enterprise value has been a better metric for now multiple, decades. Now they still use market cap, right? Let's ignore the debt. Let's ignore the debt of AT&T. Let's do that. Let's ignore it. There's no such thing as satellite internet that's going to disrupt AT&T. That's never going to happen. Anyways, folks, we know the Fed is going to drop rates, but we have to wait until June. Because of political reasons, it's very likely there won't be a drop until June. I mean, you have the president of the United States literally suing the Fed chair right now for unrelated reasons. Like, they don't like each other. The chair is very important. I don't think the chair is going to drop the rates, but the market is reacting to these changes in odds. No, we're not getting a rate cut in April. We're not getting a rate cut in March. Of course, we should be getting a 100%, 100 basis point rate cut right away, obviously. But the bluff continues until Powell is out. The USA needs to refinance the debt. The USA cannot just live on very short-term, very high debt. It needs to refinance the debt. And by the way, so do many, many, many companies who have their debt maturing in 27, in 28. Nobody thought this crazy high interest rate regime would last, close to 5 years because of a stubborn Fed chair. So the rates need to drop. And by the way, the national debt, I told you the Fed's always late. Look, they updated this on January 22nd. Like really, the last time you updated it was January 22. Strategy, a stock that I love on this channel, MSTR, updates the dashboard every second. Why do we update things on a 40, 50-day cycle in the era of AI, in the era of high-velocity everything? Anyways, the national debt, if you go to a debt clock, it's about to cross into actually 39 trillion. So even if you use the official Fed data, you only see 37 trillion. So anyways, like I said, this video is for the super fans. Let me finish about this. And this is going back to the roots of the channel. This channel is called Beat the Denominator because of this conviction that I've had long before this channel, that the currency is going to zero. The currency is going to zero. That's why the denominator is going to zero. That's why the goal of this channel is to beat it, to make sure you exceed the drop in value of the denominator. If the denominator loses 15% of its value every year, 15% means you have a checking account. You're flat. You're not even catching up with the meltdown of the denominator. Right? The goal is to do real returns above the meltdown of the denominator. That's why I'm so gung-ho about 30% revenue growth being like my bare minimum. Because if a company is growing at 15%, you're barely keeping up with the denominator, who keeps melting. Anyways, this channel is based on my conviction that there is zero interest in Western societies to relieve the Great Depression on steroids. Most Western societies do not want to do that. They do not want to wait in line for soup for 2 generations. This is not something that people want to do anymore. They wanted to do that in the 30s, when we still had the gold standard. But today, they don't have any gold standard. So today, they will sacrifice the currency. And sacrificing the currency means the big print, as Lawrence Lepard says and has been saying for many, many years. Keep in mind, the US debt doesn't even include entitlements, and the biggest of which being, of course, Social Security. So that doesn't include entitlements. What are we going to do? Are we gonna cut Social Security by 30% come 2029? Is this something they're going to do? By the way, states have their own debt, and that's not included, of course, in the US debt. Cities have their debt. States have made promises, crazy promises, pensions. This is another problem that's going to lead to the big print. And of course, the rest of the world is worse in many, many situations. Some countries are better, like Singapore is better, Switzerland is better. But a lot of major countries, especially in Europe, are way worse. Let's not even talk about Japan. So you may throw around new theories like, modern monetary theory. The U.S. in the Constitution, it says we can print money, so let's create let's create a 1 trillion platinum coin. Yeah, why not deal with a $39 trillion of debt by having the U.S. Mint print 39 single 1 trillion platinum coins? This is very serious stuff. You can look it up. This is gonna make a comeback in Congress. Wait until the midterms are over. This may make a comeback in Congress. Here's the truth, and this is what I fundamentally believe. AI is I used to believe there is no way out of this mess of the debt. There is now one clear way out of the debt, and it's AI. It's growing super, super fast. If we grow super, super fast thanks to AI, if GDP increases like mad thanks to AI, we potentially have hopes to stabilize the debt situation and sustain the value of the dollar a little better. Not that much better, but just a tad better if we supercharge AI. I think innovation is the only way out. And innovation in all sectors, right? I was listening to Kathy Wood the other day. She was in her presentation. She was talking about how curing disease and life extension would actually have, for example, a tremendous impact on GDP, because you have a bunch of people who die at 78. I think is the average or something like that. What if they died at 98? All of a sudden, you could literally explode your GDP because you have a person who's spending money for 20 more years. Anyways. Innovation is the way out. Innovation in medicine, innovation in AI. As Jensen, NVIDIA CEO says, we look forward having a company of 60,000 employees and 100 million AIs working for us. Right? 100 million cloud bots joining 60,000 biological humans. And then we have true scarcity. And true scarcity, as you know on the channel, very big on Bitcoin, can be enforced digitally. And I think Bitcoin is one of these forms of true scarcity. You could argue some other math-enforced cryptocurrencies could also be very, very scarce in the future. Controversial take, I know, but they technically could, right? It doesn't have to be just Bitcoin, but right now it just happens to be that Bitcoin dominates and Bitcoin is winning. I know some pseudo-wise people seem to think gold is truly scarce, but the truth is gold is up because China has been buying a bunch of gold. The truth is, if we if gold goes up too much more, they're going to dig a lot of gold out of the ground. And a lot of people are going to be tempted to dig out gold. And we have Elon Musk out there too. And there's a lot of gold in space. So that's another reason. Certain stocks are pretty scarce. Right? If a stock doesn't issue new shares, and it's strong, it's pretty scarce. It could help. Stocks definitely help with debasement, right? Problem with stocks is that they're subject to disruption. That's the big problem with stocks. They can be disrupted, right? Land, real estate, I'm very wary of because again, the structure. Think about the structure. That structure is also going to be disrupted. Construction techniques are going to get cheaper. But land, I'm fairly bullish on. Land, if you think of land as a way to retain value, if you own land, you own a percentage of the surface of the planet blue called Earth. And that percentage is stable across time, right? And some land is more desirable than others. So I think land is a good idea. A very small house on a big piece of land is a good idea. Maybe it's my bias because I live in Texas. But anyways, Bitcoin is one of the solutions. But the big print is going to happen. And the market thinking this is not going to happen, the market buying bonds, which are like literally programmed to be debased, is absolute nonsense to me. So anyways, hopefully this is a macro video. Most people are likely not going to watch this video. But well, hopefully this helps you see where I stand. And if you think like me, you are not alone on this. If you think like me, we're a lot of people seeing this coming. So anyways, this was not financial advice. This is not investment advice. This is not money policy advice. This is only entertainment. I'm hoping you're entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching and have a wonderful, wonderful day.